Hi, Warriors. Who's ready to have a good week? Anyone out there? I bet almost everyone here. Anyone not want to have a good week? Give me a why. What a stupid thing to say. Who wants to have a good week? Not me. I want to have who wants I want to have a lousy week. All right, anyway, so let's prevent that. Okay. Hi, Payman. Ayaz, all you guys. All right, so let's talk a little bit about the euro here. And if you've been doing it for a while, you learn to have conviction about certain patterns that you've seen play out. There, John, you are like Dale Carnegie. John Davies, who's our guest today, is saying it's going to be a great week, as they all are. Yeah, I once, this lady, I was at the doctor's office and I said hi to this lady as she was getting out of her car. And I said, "How are you?" And she goes, "Any day I'm staring down at the grass is a good day." Never heard that before. All right, so I believe in the integrity of this falling wedge because it's done nothing to have me lose confidence in it. We had the breakout, it tested it 2 days later, and then you had fairly impulsive move. So if you're not on board, what do you do? Okay, maybe you want there were breaks to buy. There was this. All pointed out here in the face webinar. These 2 buy points. So what do you do now? So, you start drilling down and you think, well, maybe there's going to be something like this first, and 1040 would be a good range, but maybe it's not even going to be that deep. So 1120 is your first area to think about, consider longs, because as I get back to the daily, who knows the rule on wedges? We've talked about it here for 2.5, gonna be 3 years in a few months. You look for 100% retrace of wedges falling and rising. So, I'm not even going to think about the short side except for maybe, little scalps here and there, which I don't do as much anymore since I became a member of ARP. So they don't let us scalp as much. Okay, Amira. So I'm thinking 1420 is in the cards up here. So buy breaks, look to buy a break. The Dixie looks like we could have perhaps a little pop. Last time we were down here, we popped here. And you know what I was thinking about it, that if we do get some type of high in indexes, which if you recall last week, I was looking for about 8220 in the NASDAQ 100 based upon this three drive formation that we would fulfill it up here. And along with that, a rally in crude, which would be a secondary high. So, we have to watch crude here. Maybe we get this blast to 58 and a half, 59. That was Greg's alternate count. We could have some trouble here. So the point being, perhaps if we get, some gravity takes hold, and I'm not looking for a crash, just a trade in the NASDAQ up here, that maybe the dollar catches a bid for a little while. So anyway, I'll see if I'm rewarded by my patience, um, which was hard in here to wait for this point to try it on NASDAQ 100. So maybe it'll be a turnaround Tuesday play. The key is the yen. This Blake and I were talking about it when risk was blowing to the upside, and kind of like we were having days like this. Only S&Ps were up 25 handles or better. And we're looking at the end this day and go, wow, why isn't it 110 already? And then we had that dollar sell off and the yen succumb to it. So this is probably the most important pair to watch this week. Right now people are going, God, what a gift it is to sell it back to former support at 8.5, and they could be right. Maybe this is all we have. I think if we're going to get that correction or pull back in the markets, that this should have peaked a little early. So potential shorts coming up in U.S. dollar yen as well. I'm not going to do it on Monday. You know, most of my entries on Mondays, I'll be honest with you, they don't work. Okay, they don't work because I kind of look for things to fade. So the best days to fade for me are Tuesday through Thursday, and on Fridays when there's an NFP. So I'm just going to let the markets do what they want to do today, and I'll be looking for some reversal action and a few things tomorrow. I actually think there's a possibility things hold together until next week. Again, I know you guys hear me quote Jim Welsh, but he's very good on not just the Fed, but macro fundamental type of narratives that could enter the market. And according to Jim, I send this to the guys because they like reading Jim's stuff too. The big risk now is that President Trump, with the market at all-time highs, even though the trade war is still going on, if he judges himself by market performance, that maybe he'll feel emboldened to move ahead with another front on the trade war with Europe in mid-November. And that's something that the market isn't taking into account or discounting at all now. So I think that's on the 14th when the decision's going to be made. But that would be a negative market event to open up a new front on the trade war. Kind of like World War II, Germany was doing great with one front. It's hard to fight a two-front war. Right, Marine? I put him to sleep already.
No, I'm here. I couldn't find the unmute button.
Isn't that a military maxim? Fighting two front wars is much more difficult than one
Yeah, I
front.
mean, it would be possible that that he opens up another. Well, I mean, what's probably going to happen is he's going to open up more of a trade war against Europe. I think maybe the rhetoric picks up there.
Yeah, yeah, he's not a big fan, with NATO and everything, all the comments he's made. So anyway, I think that's a market event um, to look forward to. And Blake, your week ahead video, finally, you have conviction now about what's happening in the dollar with the 200-day, et cetera, right?
Yeah, we're trading above the 200-day moving or trading below the 200-day moving average today. There's a little bit of pullback, a little bounce in the dollar, but overall, I still I'm long euros and I'm
Okay.
expecting a move lower in the dollar index as a whole.
Yeah.
But some pretty big rejections overnight though for some of the currencies.
Show me.
Yeah, let me.
Is the yen one of them at that 108.5 level up there? Or maybe
Well,
you're looking at
well,
Noke and stuff.
Yeah, well, first of all, like
Yeah.
the euro's wedging here, so
Yeah.
the same. This is the same play as last week. If you guys remember when you took a dip and then
Ow. You know what just happened? I have a wedge. I have a wedgie.
yeah, you have a little wedgie here. If you can get the euro down at 111.30, that's probably the better place to be.
Yeah.
Entering longs.
Yeah.
But the cable's really struggling as we approach the 30 level. But look at like the kiwi. The kiwi had a big rejection at resistance today.
Yeah.
You try to break above this resistance here. Very
So
divergent
kind of
relative
looks like
strength.
we're going to get a dollar bounce to fade.
Yeah, I think so, and I think that's that we're seeing it right now in a lot of different currencies. So
Yeah.
you gotta be ready for that. I like for me, I'm looking at the U.S. dollar, Norwegian krona. I think this is the throw
Uh,
over.
yeah. Great call last week on that one.
I played it to
Look.
the short side, played it pretty
Yeah.
well to the short side. Thank you. I wouldn't mind shorting a rally here either.
Yeah.
So looking for a little bounce in the U.S. dollar Norwegian krona to fade it. But you got to be patient. It's important. As traders not to jump the gun, obviously. but you got the Aussie that's still trying to make headway. I think the Aussie could pull back to maybe 60, 69 cents, maybe a little bit lower. I mean, we're at 69 cents, but basically a little bit lower than that, maybe just below. Overall, it's been a pretty quiet market. I mean, overall, it's the market's been kind of slow going, and today, and the U.S. dollar Canadian's got a little bit of a bounce in its step here. It's bouncing, and that's really interesting because of the move that we've seen higher in crude.
Yeah.
That we've seen crude strengthen, and it has had zero effect on the U.S. dollar Canadian or the U.S. dollar Norwegian krona for that matter. So and crude's pretty strong this morning. As you can see, crude's right up against where's my crude? Right here, right up against channel resistance, and it's nearing the 50% retracement. So overall, I'm just hoping for a little bit more of a dollar bounce to play into. And I think if you approach the market that way, that you let the market come to you, you don't just assume price is going to go there. You let it come to you and get to the levels that you want to enter. That's going to be the way to play it, overall. So
Okay.
hold on really quick. Sorry, I was just adjusting something here. So yeah, and this week's going to be a little bit more of a quiet week, especially after last week. It was a crazy week last week, but I'll tell you this much: I slept in today, and it was nice. Dale, it was.
Oh,
I know. For you, it didn't change anything for you, but man, for me, that extra hour was wonderful. Unfortunately, my alarm still went off at when it was supposed
forgot to change it.
I forgot to change my alarm, and I'm like, no, I got another hour, but I continued to
You
sleep through
changed
it.
it
I
now,
changed
though,
it.
right? All right,
Yeah,
good,
it's
man.
I got it switched over. So yeah, now as far as like the Jim Welsh, when's the next time you're gonna have Jim on?
I don't have them scheduled, but
Oh, okay. I haven't, I didn't get an opportunity. I was going to read it yesterday. I
yeah,
didn't have an opportunity because of,
fun.
family commitments and stuff. But
But you were having fun.
I was having fun. I actually went,
Okay.
I had,
Blake has fun, everyone. Newsflash.
yeah, no, I have a buddy of mine is actually moving out of town. One of my best friends, he's moving out of town, this week. He'll be
I hate
gone.
when that happens.
I know. It's even though we don't spend as much time as
You know
as
they're there.
yeah, exactly. You know that they're there. They're within a stone's throw away, and now he's moving to back to Texas because his wife is from there, and then my another one of my uh, best friends that I grew up with, he turned 48 this weekend, so we went to a hockey game. That was fun.
Oh yeah, what are they? The Road Runners there still?
No, it's the Coyotes.
Coyotes.
Oh,
They're
everybody
walking down the
else out there.
street where I live the other
Huh?
day.
The,
I see them walking down the street here.
oh, and the Coyotes?
Yeah.
Are you still in Temecula, or you're closer
No,
to
I'm
the?
in San Marcos,
Oh,
and
okay.
so I'm not that. It's cement. It's civilization. They have nowhere to go. They're just walking up and down the streets, looking for pets.
I
By
love
the
the
way,
names you give to your
I did.
teams, guys.
What's that?
I love the names you give to the teams there. They're also
Yeah,
funny.
yeah, I know. Everybody uses animals. It's like,
Yeah.
eh, by the way, Dale, I forgot to tell you, I'm actually going to be in Temecula in January.
I hate Temecula.
I know. I
No,
gotta go there.
everything died there.
Well,
Anyway,
I
but
gotta
it's
go.
a cool town. I mean, it's a cool town. You've been in there, right? The Western. It's kind
Ye-
of like it was formed, I think, in 1850 or something like that. They had the sign when it was incorporated.
I've
And
driven through.
you're
I've got
going to the wineries, probably, right?
no. We're going for a soccer tournament. So
Oh, okay.
yeah.
Good
How far
weather.
away is that from you now?
Uh, 40 minutes, 50
Oh, gee,
minutes.
it's a bit of a hike. Anyway, yeah, I've got to go there this
I may
for.
drive up and say hello.
All right, well, I'll be
In
there for a soccer tournament.
my sports car.
Yeah, in your sports car.
Yeah.
All right. Well, you know, it's yeah, like I said, it's a really more of a quiet week this week compared to like last week. Last week,
What's going to move us this week, Blake? Any news events you think are going to move us?
no, I mean we have the RBA tonight,
Yeah,
and
that'll
which
do
is
it.
that's not going to do it. And then we got the Bank of England on Thursday. It's overall, just a fairly quiet week. Oh, you know what I wanted to do? Look at the S&Ps. I mean, we are just
Yeah,
ripping higher.
yeah.
And I mean, how many people have been trying to
Trying
short?
short.
Yeah,
Yeah.
I mean, just trying to short the market, just getting run over, and we're
Throw
we're
over.
we're getting that. Well, it's getting that blow off topish.
Yeah.
Uh, you know, I the one of the guys that we get some of his analysis. He does great analysis not only on FX, but he's an ex. I think he's ex. Uh, JP Morgan guy that's gone out on his own for does analysis for different institutions.
Yeah.
He doesn't see the value in equities, but he thinks that 3,100 is doable, and I
Oh
agree.
yeah. Could be there at the opening tomorrow.
Yeah, I mean we
I'm going to try yeah, see, you're getting throwovers in S&Ps, but you're not in the NASDAQ 100. So, you would think that the NASDAQ would lead it, but it's actually not.
well here's
Oh,
the
where's
Nas.
that D come in?
It comes in. This is would be 161% extension of the last move
83
lower.
and a half?
It comes in around, let's see, 161. Let's just, yeah, about 83,
Okay.
about 8,300, and that seems logical,
Yeah.
right? And
Uh-huh.
if you look at the S&P, the last, this is we could do the major move. I mean, it doesn't matter. Both of these moves
Oh yeah.
will equate. Here, let me just give this a little bit different designation so we can see it. I mean, 161% extensions reach up to 3120, 3170 in the S&P. I mean, both look doable. And so therefore, if we continue to get a grind higher in the markets, you've got to be prepared for it. I when I look at this, the FX market is more or less stunned at this moment.
Mhm.
The FX market is not responding to all of this. Yes, we are seeing a little bit of a lift in like here's the dollar yen. It's come off trend line support. And one of the things, if you believe that stocks are going to peak, like let's just say sometime in the next week or two, which if you get the S&P at 3,100 or 3,160 or whatever the case may be, and it does reverse, what I'll be looking for is the dollar yen to fail again at the 200-day moving average and possibly break back below this trend line. Because once, I shouldn't say once, if the dollar yen breaks below this trend line right here, which currently comes in at, let's just call it 107.95 now. If it breaks below this trend line here, that's when I believe that the market that'll be our cue that the S&P rolls over. So, for those of you guys that are looking to fade stocks, if you want confirmation that the stock market is indeed going to roll over, I think you have to use the dollar yen as your proxy here. Okay, so let me say that again. I'm going to say it slowly. If you think the S&P, like let's say the S&P does this, doot doot, right? We spike up to 3120. We could spike all the way up to 3160, but let's just say we do, and we hit 3128 here, and then we start reversing. If the dollar yen at that point rolls over and breaks below this trend line, that would be my confirmation that stocks are done. They're finished. But that's how I'm viewing the market. I'm not, I don't, you could say, well, then I'm going to short the dollar yen when it comes back up to 109. You could, because that's where the 200-day moving average is somewhere up here. Uh, but I'm looking for it more as a confirmation tool to signal that the top is in, and in equities. So we looked at the S&P. Here's the NASDAQ. Let's take a look at the Dow really quick. The Dow, this is the lack of confirmation that I think we see here. Remove this. Whoops, that's not what I wanted to do. Okay, so the lack of confirmation comes in the Dow, but the Dow might actually, get that roll over. We have the, breaking out of this triangle. Here's the top of the, if you had a megaphone pattern, right? This is the upper trend line, but I still think we can go higher in the
Yeah,
Dow.
the generals are finally gaining courage after the troops have been mowing down everyone, so
Yeah.
S&P and NASDAQ, and now the generals are going, oh, it's safe. We could start to march forward.
Right. Yeah, exactly. So now you're seeing some of the big cap names. It's exactly what happens in war too. So
right? I thought so. Yeah.
Yeah, it does. Yeah, that's pretty much the case. So anyway, like I said, we have all the equity markets are just stretching higher, and I am looking for them to peak somewhere up here, but I'm not brave enough to step in front of the market and start shorting at this point in time. I'm hoping we get some sort of indication that there's a blow off top. But I will tell you this much: the stock market is on fire, and it is nonstop. You don't want to be in front of it, at least at this point in time. So what I'd like to hear from is I'd like to hear from my colleagues Steve and Stelios and see if they have any comments regarding equities. So what's up, gentlemen?
Good morning.
Good morning.
Good morning, Blake.
How you guys doing?
Very good, very good.
Good. How have you been?
Good. Like I said, I got a little bit of extra sleep this morning. It was awesome.
Good.
So we have equities that are reaching higher. How do you guys feel about the state of the market right now? Because the FX market's very quiet. I mean, we're pretty quiet at this point in time. But equities, they just continue to bounce, or I say bounce. They continue to rally. So what's your thoughts here?
Well, the question is, what do we think is driving it? Because if you think about it, any kind of market event, they take on the positive side and just keep going. So we get good US data. Oh yeah, great, the economy's bouncing, stocks going higher. We get really bad data. Oh my God, there's going to be more zero rates in QE, so stocks are going higher. So I think what could be driving it is positioning. This has been, after all, the most hated rally, right, ever. Everybody hates it, and so we remember we did this blog post a week ago, was it? We said that there might be one last blow off top, new all-time highs, and then a correction. I still think this is going to happen. The question is what's going to drive it. And if you remember a year ago or a year and a bit ago, when we had a half decent correction, now there we go, it's on the chart. It started due to, this was late 2018, started with yields going higher, remember? So that could be, in my opinion, the driver again. But how do we see yields higher at the moment? It's very difficult to see that. But
with all central banks bringing rates down to
exactly
negative, yeah. Like how do we get a rally in yields?
Yeah, guys, but there is one thing to consider here. Now we have the complete yield curve being above the Fed rate. We've already seen the first signs that the market isn't willing to play ball anymore. We saw that in the repo market, which the Fed has to intervene on a daily basis continuously to keep it afloat. Because it's very simple. I think that investors that do understand what's happening, for example, bond investors that always know and understand what's happening in the market, realize that holding a bond now with the new cycle of monetary policy that is just beginning with the ridiculously low yields that they offer is a very, very bad proposition. So I think that's where things could go wrong. So I agree with you, Stelios, on that.
Yeah.
Well, what we are seeing is a continued rally in equities, and like I said, only the brave will stand in front of it at this point.
Oh yeah. There's no question. Just to keep in mind, Blake, you remember that I talked about that. What was it? 3 weeks ago, because I keep paying attention to the Fed's balance sheet every week, every Thursday. We now have official information that the Fed has inflated its balance sheet by 250 billion within 7 weeks. I remind you that QE infinity, QE3, which it was called QE infinity because we didn't have like an end date, up until some point. QE infinity was, what was it, Stelios? 60 billion, 70 billion per month. Which of the two was it? I don't remember exactly. Doesn't really matter. You can say 60, you can say 70. What doesn't change is the fact that, let's say it was 70 billion per month. So that would equate to 140 billion in the course of 2 months. And now we have, in less than that, in 7 weeks, 250 billion added to the balance sheet of the Fed. So, they've gone in full force. Now, everybody has brains enough to be the judge. Why do you think that Fed is doing double the QE it was needed to do when it was officially admitting that quantitative easing back then was needed as an extraordinary part of measures to keep a battered economy afloat?
Yeah. So why are they doing it now? It doesn't,
Yeah,
because there's a bank with a bad position. The banks don't trust each other to lend to each other overnight for some reason.
Yeah, they must know something, right?
Well, they know what they own.
Yeah.
Oh yeah, they do.
But do you think that's the whole reason, is just to settle down the overnight market, the repo market?
No.
Okay.
Absolutely not. That's probably,
to stimulate the economy again.
7/8 of an iceberg is below the surface of the water, right? So the repo market is probably the little part of the iceberg you can see above water.
Right. There's a liquidity crisis brewing.
Yes.
That's what I think, right?
Yeah. So the question is, if there is a liquidity crisis brewing, is it going to come back in the form of a dollar accumulation period?
There'll be a blow off if it turns into, I think, a crisis liquidation. People will liquidate all different instruments, asset classes, because they need cash to roll over debt. So
yeah,
I don't know what's immune.
But in that case, is it
dollars?
Well, I don't know if it's by dollars, because they have dollars deployed right now. That's the
part of the shortage, I think, is all the huge amount of debt that's denominated in dollars means there's that much more demand for the largest debtor to be able to roll it over. But you're right, it could go the other way, that, lack of confidence and sell the dollar off. But most of what I've read is that's going to create 110 Dixie, 120 Dixie, but we could go to 94 first.
Yeah.
If you remember, in 2008, the initial reaction was to buy dollars.
Yeah.
The dollar squeezed quite a bit. Then it started going the other way.
It's the Pavlovian reaction. Yes.
Yeah, and this is a bigger debt bubble than 2008. So more dollars will be in demand. Just a theory, like everything else. It doesn't make you money. How do I make 20 pips off of that?
Right, exactly.
It's great over a beer.
Yeah, with macro you can't make little pip here.
Only Stelios makes money with macro.
Yeah, but as you very well know, coach, when you take macro positions, it's not like for 20 pips, right?
Yeah.
You need to have
for
patience.
Thousands.
Yeah, you need to have patience. You need to stay in the position for time. You need to have very flexible stop losses, and obviously targets that are quite a distance from where you open your position, so the risk reward makes sense. So it's a totally different type of trading.
Yeah, I'd have to be under anesthesia or be like Rip Van Winkle and go to sleep for a while. All right, screw it up.
All right, guys. Well,
All right.
I'm gonna pass it over to you, and I'm gonna let you. I left you a lot of majors to talk about and a lot of currencies to talk about. You know, I know it's slow, but this way you had a lot of cross rates to deal with. But for those
Absolutely.
of you that have not tried Forex Analytics, make sure you do so. Remember, it's only $1 for 10 days, and also visit our webinar sponsor, Forest Park FX, if you're looking for a broker, and you know, especially one that that doesn't give you anything. Chat with these guys because this way you might be able to be part of our reimbursement program where you can be part of the Forex Analytics community for free. Well, based on your trading, depending if you do enough live trading, and then also if you're a U.S. based trader, you could get qualify for cashback rebates, which is awesome. But Forest Park FX, they are our webinar sponsor, and at least if you're not a Forex Analytics subscriber, visit with them because they're the reason why we can give you this webinar each and every day. All right, guys, I'll pass it over to you. Thanks very much. Have a great Monday.
Thank you,
And
Blake.
Thanks,
I'll see
Blake.
you
Have a
guys.
nice week.
All right, thanks. You
See
too.
you later.
Thanks.
Bye-bye.
Bye-bye.
Okay, one
One
comment
more
I
thing
wanted
that
to mention. Go on.
Blake forgot to mention: you can even participate in the reimbursement program by staying in the same brokerage firm that you already are. So you don't even need to change broker. I mean, if the broker you are, you're really satisfied with that brokerage firm, and it is indeed the ideal for the type of trading you do, you can still participate in the reimbursement program. So doesn't necessarily mean that you change the broker.
Yeah. Okay.
Go ahead, Stelio.
One thing I want to add, Blake was talking about oil squeezing, and is it a coincidence that it's been squeezing for a few days now, and Saudi Aramco are now going to be, they've confirmed that they're going to do their IPO.
Are they? Because if you remember, they've like announced, potential IPO dates like
3 years now, right?
Yeah, 3 again and again, and they're going to do it, and they're going to do it this time, and don't worry, this time they're actually going to do it.
Yeah. They published the official intention to float document. I mean, obviously things can get delayed, but it seems like we're on the last hurdle, the last stretch now, and so that's one thing. I tell you what, when the IPO is priced, I don't think I will want to be long oil. That's for sure.
And something, Stelio, I think they very well know it was either now or
never.
Who knows when. And when I say now, of course, I don't mean like the specific date or a week later. I mean, either this last period of hurrah. One thing is for sure, I think they're smart enough to know that you won't be able to do that worst case scenario past the US elections. I think they are smart enough to know that we're at the very end of this business cycle, so you either do it now or you don't.
Yeah. Okay. What else do we have? We had the retail sales out of Australia was weaker than expected. It's going to be interesting to see if that plays into the RBA later today. I mean, I'm sure it's one of the things they take into account. And remember, this week is full of PMI releases from Europe and the US, I think. Yes. We had some this morning from Europe, all beat slightly. So, but nothing.
What are those still? PMS readings?
PMS, yeah. Purchasing Managers Index is a very good leading.
All right. Oh, okay. I just thought we were going to have to be worried about angry outbursts from the market. All right.
Yeah, so we had those. They came in slightly better than expected. Really nothing to write home about. So it's been very, very quiet today, and probably will continue until at least tomorrow, and then we have Bank of England. So we have a few things this week, but today is probably not a very interesting day, I'm afraid.
Okay. Okay, cool. So anything else, Stelio? I know that, as you said, it's a quiet day, but we have quite a few things to cover. Anything else, or you, coach? Anything else on your mind?
I'm a bit hungry, but that's about it.
Okay.
No, okay. I don't have anything else, mate. Sorry.
Okay, great. Okay, now having to do with crude, Stelio, since you mentioned it, I'm still tracking crude, appreciating within this channel. So, so far the appreciation is quite orderly, but I wouldn't be surprised if it finds, keep in mind, it's currently testing confluence of resistances. It's the 50% fib and the 200 daily moving average. You might not be able to see it here because it's exactly on top of that fib line. So quite a nice confluence of resistances here, and I would be quite careful because if on one hand, if we punch through the $58 level, then we're going to be talking about something different. In that case, I wouldn't be surprised to see a move towards 62 and this trend line resistance. But as long as we stay within this channel, I wouldn't be surprised if we see crude roll over again and move towards 51. Now, I did see that we have a friend mentioning, so I don't leave the subject, I want to mention USD NOK, and I also want to see what's happening with natural gas, because a friend was asking, I mean, we're only having a look at it whenever somebody's asking for it. Oh, not a bad prediction. Last time we saw it, it was likely there, and I said that perhaps one more leg higher. And as it seems, that's indeed what has been happening here. So let's see quality to see if this is a corrective rebound higher. Where would we place a target? Actually, we reached it today, as you see. Equality of the two legs higher. No, there it is. No, we didn't reach it today. It's a little bit higher. Equality of the two legs is at 287 almost. So we're almost there. And we're going to find out then if this is a corrective bounce higher or the beginning of something much bigger. If you see, the RSI had already been diverging for quite some time. Look at this. RSI was diverging since April, right? There you go. So interesting to see what happens from here. One thing is for sure, if you really want to buy it, now that we're reaching equality, I don't think it's such a good idea. Let's delete these since they've already happened. I think likely some type of a pullback, would be a better buying opportunity if you're looking to be long natural gas. Okay. So that's what I think about it. Now, having to do with the USD NOK, of course, has been benefiting from this move higher in crude. And in fact, it has now broken below this ascending wedge. Found support at the green line that you see is the 50 daily moving average. Found support there. So the question is, what happens from here? From a technical perspective, even a retest of the broken trend line support from the wedge is likely a good opportunity to short it again for a move towards 892. So I do think that a rebound towards, let's say, 913, 914 is probably a good buying opportunity. Sorry, a good selling opportunity, and at least risk reward is going to be, very appealing. Now, not related to crude, but definitely a dollar pair that is, decently related with the euro. That's why we keep an eye on it frequently. This is the USD SEK. So as you see, USD SEK closed the week exactly at this ascending wedge that we were monitoring. Today, we see a little bit of a reaction from the trend line support. So, this is another pair that is actually quite interesting to watch, because I do think that if USD SEK breaks down, then we're going to see a continuation higher in the Euro USD and, another move lower for the USD Swiss. So USD SEK, something I'm actually watching on a daily basis. If you really want to buy it, this is definitely the place that you do it, right? From a risk reward perspective, I mean, you can have a very, very tight stop loss, roughly, let's say at 953. And, you can hope for a continuation higher, or, we might even get more ping pong between these wedges trend lines, right? I mean, we can retest it again, move lower, and, so on and so forth. As you can see, this is a game that, the market is playing since the end of 2018 summer. So, if you really want to buy it, as I said, this is, an excellent risk reward to do so. Now, having to do with the metals that, I know that you ask for every day, some of you at least. Gold still above this pennant, so looks quite good. Silver above its equivalent pennant. So I have to say that, they both look constructive. I mean, we haven't seen a real acceleration.
And remember, Steve, gold is but pavement in heaven because the streets are paved with it. So it's only cement. So if you plan on bringing it to your afterlife, raise some cash and bring a few bucks up there. Anyway, go ahead,
and
buddy.
Speaking of gold, and here's the gold-silver ratio. I'm curious to see if actually we're done with that correction. Yeah, in which case another push lower, an acceleration lower, as you very well know, Coach, will indicate that we're going to have more overperformance from both of the metals, right? Platinum testing again this key resistance area, and palladium still within this steep ascending channel, still holding very nicely, finding it tough to go through the 161.8% extension, but keep in mind that we also have the cup and handle formation, which would indicate even further gains towards like 1940, 1950, something like that. So, undeniably remains bullish. Now, let me see. If I have a friend here asking to check Fitbit. Actually, Stelios, I don't remember the ticker, so let's see, it's Fit, right? Yeah. Stelios actually was long Fitbit when this happened, and you know how it is. As always, when you're long something that explodes higher, you only wish you had a bigger position, but at least he had a position. So, that was a very nice trade from his part. Yes, Fitbit got, Google is buying Fitbit, and obviously this created this explosion from like 280 to like above 7. So in essence, almost triple the prices for Fitbit within, what is it? I mean,
is that today's gap, or that was Friday's gap that you're showing up there?
That was Friday's gap, Coach.
Oh wow!
Yeah. That's when we got confirmation, if I remember right, because it was like high speculation up to a point.
Yeah.
You know how those rumors usually work, Coach, right?
Yeah.
I mean, usually what happens is you have people with inside knowledge doing this, right?
Yeah.
Then it becomes more common knowledge, and then this happens, and then you have confirmation, and I wouldn't be surprised if you see a gap higher.
Keep going. Yeah.
Yeah, and now it remains to prove if this is a runaway gap, as we call it, and it keeps going from there, or it will be a buy the rumor, sell the news temporarily, fill in the gap, which is likely, and then continue higher or stabilize. I mean, we've seen this type of price action many, many times in this type of occasions. Now, having to do with the indices, although you covered them quite well with Blake, let me just reiterate here that we have this beautiful zone of resistances between like 3,107 and 3,125. So multiple resistances there, plus this ascending wedges resistance. So I'm really looking forward to seeing if we can get some type of reaction from there. Now, you were talking about the Dow Jones lagging, which is, probably going to break today higher. I mean, at new highs finally. But don't forget that the biggest laggard here is
Russell.
The Russell. And it's going to be very interesting to see. That's why I mentioned Russell today. Russell has been stuck in this broad range since the very beginning of the year. So from, since January, and we now have like November, we've been stuck in this range between like 145 and like 160, roughly.
So maybe that's a hook, Steve. We get the confirmation in Russell, and then it's over.
Let's see, but it's going to be interesting to see if the Russell can actually finally break above this range. Now, of course, theory would indicate in this case that, especially such a well-developed range, should extend
Yeah.
at least as much
Back
as
to the old highs of last year.
yeah, and even a little bit higher if you know this. So
Yeah.
that would indicate that a breakout from like 160, to be exact, if you want to take the previous high there, 161.11, that would indicate an extension to new highs after spending like 11 months stuck in this range again and again and again. So it has been a very nice range play. Let's see if it can turn out to something different. So I think the Russell is probably the one to watch, because I wouldn't be surprised if the S&P reaches that confluence of resistances we've been talking about at the same time that the Russell is actually testing the high end of this range. So that would be very interesting to see when both of these indices are at important resistance, if there is actually enough confidence from the market to push through. I really want to see that. And having to do with NASDAQ that you mentioned, NASDAQ was indeed lagging in breaking out of the equivalent ascending wedge, but keep in mind with the price action that we've had pre-market so far today, as you see, we're almost at the wedge's resistance. So, and it's a confluence, as you see. It's also the 127% extension of this last corrective move lower. So 8,260. A decent confluence of resistances. Let's see if the Nasdaq can actually push through there. And one more index, because before I go to the questions, this is the Nikkei. So the Nikkei had been trapped for quite some time in this symmetrical triangle. The Nikkei broke higher, retested the trendline resistance as support. It was actually a triple confluence, as you see, because from that point, then we had both the 50 and the 200 daily moving averages passing. So triple confluence of supports held, and now the Nikkei is actually pushing higher. So it remains to be seen. Of course, the correlation has, broken down quite a lot with the USD yen. I mean, it used to be like extremely tight. It was almost like, whatever the Nikkei was doing, the USD yen was doing exactly the same thing. You could put one on top of the other, and you couldn't, distinguish which one is what. But it's clearly lagging here, right? Having said that, we mentioned at the end of last week that the 108 is support. So far, USD yen is holding 108, but not in a convincing way, right? So once again, my advice about USD yen would be look elsewhere. I mean, yeah, if you really must do something at the moment, it would make sense if you want to buy it against 108. I mean, it's just like 50 pips of a stop loss. But personally, I think there are much better opportunities out there for you to be wasting capital and time trying to figure out what the USD yen is going to do, which we've seen how much suppressed it's been. Now, question about EuroCAD. Now, EuroCAD might be trying to put some kind of a bottoming pattern here, but all in all, remains within a descending channel. Let me zoom out so you can see it. There it is. So having to do with channel, we're more or less, not in the middle of it, a little bit higher. We're facing resistance here, horizontal resistance area at 147.50. So, I mean, against that level, I guess, in the short term, risk reward would say, be short if you want to do something, but look at this price action. I mean, why do you want to do anything with it? Personally, I think, you should rather stay out from EuroNOK. It doesn't seem like it's really willing to go somewhere fast at the moment. So, as I said before, with the USD yen, I think that, it's better if you put your capital at work elsewhere. Now, having to do with the DAX, because we have a question about the DAX, I actually wrote in the analysis, huge day from the DAX today so far. I wrote in the analysis that as long as we're holding above 12,850, I think there is no real resistance until we make it to 13,200. I didn't actually expect that that might happen within a single day, but as it seems, it might even happen within a single day. So, we're now reaching an area of resistance. Clearly, the DAX is bullish since it broke higher from this symmetrical triangle. Keep in mind here, those of you that are a little bit observant, if we overlay, sorry, it's at compare if I remember. Yeah, add symbol. So if we overlay JPN 225, so the Nikkei, okay, nope, that's not what I wanted to do. There we go, again. So if we overlay the main chart, there it is, JPN 225, you will notice that the correlation with the Nikkei is a decent one. It has been a decent one lately. We had this divergence here, but other than that, you can see that the Nikkei is actually, or the DAX is actually closely following the Nikkei, or the Nikkei is closely following the DAX, doesn't really matter. So those two are, quite nicely correlated. And if somebody says, okay, no shit, Sherlock, I mean, both of them are stock indices, that's not true, because if you overlay, for example, the S&P, you're going to see a totally different pattern, right? So, but those two are, quite nicely correlated with each other, as you see. Not that it's like something you can use today, but, given that, perhaps a divergence at some point, again, as the one we saw here between the Nikkei and the DAX, a divergence between them at some point might indicate a turn and a good trading opportunity for the other. So, for those of you that care, just wanted to pinpoint that. Buy USD until you need to turn it back into your own currency. Bitcoin current daily is correct. QE now called repo. Steve is correct. And yeah, there are some people that foolishly, it's the least I can say, they believe that what the Fed is doing now, it's not actually QE because it's buying like very short-term debt. But whoever hears that argument and thinks that it's a valid argument just doesn't understand how the Fed works with its balance sheet. Because the Fed is actually, when it is not doing quantitative tightening, which it has now finished and completely reversed course, what it does is that it keeps rolling over whatever matures. So if the Fed is buying like 5-day bills or buying like 30-year bonds, it makes no difference, because unless it indicates so, whenever they mature, if it's in 5 days, in 5 days, if it's like a month, if it's like a year, if it's like 5 years, 5 years, it's just going to roll over with new equivalent debt, right? So why does it actually matter if it's short-term, long-term, or whatever else? I mean, it's the same exact debt monetization concept, right? The exact same thing. I mean, it would matter if they were like, we're going to buy it, and when it matures, we're not going to roll over this debt. So then it would matter, because you would say, okay, come on, this is like 30-day paper. So yes, they're buying it, but in 30 days, it's going to be off the balance sheet. But that's not what they're doing. So why does it matter? It doesn't. Yes, Grigori, you're absolutely right. Duration does matter, but I mean, it doesn't matter having to do with the intentions of the Fed and the balance sheet. Because when they buy something, as you know very well, they will keep rolling it over as many times as needed. So it's not going off the balance sheet. That's what I'm trying to say. Coach, what do you want to say?
I just want to know if it's going to be safe for me to move to Athens during the financial crisis coming up. Better than San Diego, right? With all the population and being right in the middle of all this stuff. What do you think?
In general, Greece is a very safe country.
How about Europe in general over the US with what's coming?
Listen, we've had this conversation before. It's, there is no doubt that the vast majority of the European countries are a much better fiscal position than the US is. There's no way to doubt that. So, take that, any way you want.
Okay.
But, if you're asking me if it's...
Can you put a deposit down for me on that bench that you took a picture of on your vacation a few weeks ago, bro? Huh?
Whatever you want, coach.
Anyway, yeah,
Nick
I mean, I don't know, Steve, I hope they could hold this magic act together for another year or so, but it's kind of like the writing's on the wall.
Oh yeah, there's no question about it.
So I guess the best we could do is capitalize on it financially and be prepared for when the winds blow. And I just would rather be watching it on television than be in the middle of it.
Yes, but you know how it is. Unfortunately, the viciousness of the recessions we have since we decided to turn the positive concepts that we knew from economics to negative. For example, non-productive debt, for all intents and purposes, was always, even by Keynesians, accepted as something bad. So, for example, getting into debt to buy a new television is the worst kind of debt you can have because it produces no income. Now, going in debt to buy machinery for a factory, that's a different story because you're investing to produce income, right?
Yeah.
So now we've created a society and, going along with it, government policy, monetary policy, and everything else that in essence promotes everything that is harmful to an economy. Consumers consuming even more by going deeper into debt. Nations promising even more to citizens from money they don't actually have. Not to mention the most important part, the unethical part of it. I mean, just think about it. Many people don't realize that, but think about it. When you issue 30-year bonds, not even to mention that some countries have done that with 50-year bonds or 100-year bonds. In essence, what are you doing? You're saying that I'm going to hold responsible a generation of taxpayers that probably isn't even born at the moment, or they're like, at school, at kindergartens, to pay up for over-consuming currently. So, Is there anything more unethical than that?
Well, you know what concerns me more is social mood. And, you could say what you want about Prechter, and he didn't invent looking at, what's happening in movies. And in America, there's so much anger and discord right now. And this is with the market at new all-time highs. And financial conditions are still somewhat, they're still stable and good for some people even. So, but the social mood, do
you think the trend is pointing to an improvement or a worsening of that situation?
Of the social mood?
Yes.
If there's anger and discord with the S&P at 3,000, how much more magnified would it be if a bear market ever took hold and we had a financial crisis and people couldn't get their pension checks or social security checks, or the grocery stores are empty. We've had rolling blackouts. I'm just saying the social mood is not good when it should be good. If you measure it by what President Trump measures it, that's the Dow Jones. And the social mood is the polarity opposite of what our financial markets are saying.
Yes, I totally agree. And something.
Look at the movies coming out and everything.
Since you mention it, I know that you're a senior citizen, so you belong to the previous generation. But in all honesty,
I'm a yuppie.
In all honesty, and
untested generation.
Let's assume that you had children, grandchildren, etc.
Yeah.
What do you think more fair? Current generations that have already gone through many decades of prosperity and over consuming future resources actually getting less than they were promised, or future generations having to be enslaved in debt that they never had a word in creating? What do you think of the two is less fair?
Oh, the B is a lesser of two evils that you
I
know, we
agree.
should take a hit. And you know, my generation, Steve, we didn't go through any major financial, like, you know, the greatest generation went through a depression and a war. We're pretty untested. We've rode this wave. The music was great, everything during this wave. So yeah, you know, we should give up some of our comforts. The only thing is, people on retirement that you're talking about, a lot of them only live on 12, 1,400 a month. So it's not like they're living an ostentatious lifestyle for their life's work either.
Oh
Even though
no,
demographically it's unfair to the younger generations.
yeah,
So I don't know. The whole thing, we just need, you know, we just need to start over.
I would agree with that. I would
Yeah,
agree
so that's
with that.
probably
And you know
what's gonna,
something, at some point, governments will have to be, will
that's
either
why I
have to
like the
be,
bench.
will either have to be honest and say that, listen, we know you were promised ABC, but there is really no money to deliver that. Or there is always, of course, the dishonest way of politicians, which is what? We're going to inflate away what we've promised. So we're going to give you exactly as much as we promised. But guess what? What you're getting now is going to be worth so much less than what you thought it would be worth when we promised it, that, you know, it's really not
Well,
going
it
to matter.
already is.
Yeah, but I mean, that can accelerate
Yeah.
even further. You know what I mean?
Oh yeah, it will.
It will probably, yes.
Yeah. All right. Well, Steve, great analysis when we were covering all the indexes and stuff. So, I mean, there are some zones. I don't know about you. I'm going to attempt it at some of those levels you talked about today. Maybe
It's
we're there tomorrow or
it
something.
will definitely offer some nice risk reward opportunities,
yeah.
but you know, we see that now they're throwing everything at the market, the heat sink included and everything else. I mean,
Everything's a
the sink
shot.
included. Yeah, so I mean, you know, they can pump it even more for
Yeah.
a limited amount of time. There's no question about it, right?
I'm just
I mean,
thinking, you know, I know Blake poo-poos my Wall Street maxims, but here's one for you. The Bears feast on Thanksgiving, the Bulls feast on Christmas. And you know what I'm thinking about this, Steve? The debacle, and thank you for your patience, John. We'll go to you after this. Think about what happened last December. It was a debacle. I mean, everyone, you know, the Fed tightened and we had that swoon. Well, you know what? People remember that. And
they
even
do.
though it's not going to
They do,
happen
but
again.
conditions though are very different from last
Okay, well, I'm
Christmas,
just
as you
saying
mentioned.
people remember it. It happened. And some people may front run the chance of it happening again by liquidating in November. That's my view.
Let's see.
Into Thanksgiving. So we'll see. We'll see if the Bears eat the you know, what's the name, what's the drumstick. I always want the drumstick on Thanksgiving. How about you? Do you eat turkey in Greece?
Oh yeah, absolutely.
Oh, okay. All right. So when I move to Greece, you and I will grab a wishbone on each side, Steve, and we'll both make a wish and see who's comes true.
Looking forward
Looking
to
for.
it.
Wouldn't that be fun? Breaking wishbones, you, me, and Stell.
Absolutely.
All right, buddy. All right. So
Enjoy
I'll
the
catch you
interview.
later on.
Oh, of course you will.
We have a double shift today.
We do.
Do we publicize it?
No.
Okay. All right. Anyway, thanks, Steve. John, I'm going to
Thank you,
promote
Dave.
you now. Thanks, Steve. And I'm going to unmute you. Oh, there you. I didn't even unmute you yet. Are you ready, John? Let's see. You're muted. Okay. Here you go. Welcome back, John. Hi, buddy.
Can you hear me fine?
Got you now, John.
Wonderful. Hey, that was a great topic you two were going on. I'm sure you saw my comments, but it was a fabulous topic. You
Oh,
two were
thanks. Like, only only 20 people left while we were talking about it.
You know what, though?
Because it's
before I
not
say
about
anything, if I
making
may,
money now. Huh?
if I can interject on that one, because I travel the world. I travel the world, and let me and you know, we've both been through the trading miles through these many decades. If there is one country in the world that I will bet on, and I will bet on matching any of the challenges that will come of the financial future, it's the United States. Like
Okay.
there is no country that I would say I'm all in, I'm pushing all my chips in, like the way the American community will respond. And I know it's going to be difficult at times, right?
Okay.
But trust me, you
Well,
know how to
that's
get off.
optimistic. I hope you're right.
Yeah. Well,
I'll be watching you on TV.
and honestly, Dale, that's part of the reasons why. And first of all, you know, I'll say it afterwards. But part of the reason why I love doing this show and helping people out, because what you do is a service to not simply the financial community, but the growing investment community that is going to continue to expand for the next 30 years as many move to retirement years, and they need to be able to manage their funds in tumultuous environments. And what you're doing is, and your entire crew at Forex Analytics is absolutely tremendous. But I think it goes beyond the, let's say, the advanced progressive investor, futures investor, but
Okay.
all those managing their funds.
Okay. All right. Well, you talked to me a little bit on Twitter, John, that I was a little bit taken aback. But, you know, you go where you see opportunities.
Yes.
And you're talking about these new derivative contracts on crypto, particularly Bitcoin, that you're going to be, you have a foray going into them and
Yeah, well,
kind of doing the same thing you're doing with equity options.
absolutely. Well, the exciting thing about this is if you're
And by the
considering,
way, John,
if you're
do you want,
considering,
by the way, John, do you have a screen to share or you want me to use mine?
no, I was actually going to give you the BTC on CME.
Okay, well, I'll pull up Bitcoin.
Yeah. See, the thing is, this is you have to go back in time a little bit. So this is when you look at what's happening of recently in the last 2 weeks that has been announced by BACT and the CME Group is the coming launch of Bitcoin options. Now, I know for many people they'll be varied opinions on cryptocurrencies and Bitcoin, right? And I recognize that. Some don't believe it's a store of wealth, and some believe it is the absolute panacea. I respect that. But what you have to understand for an investor, the launching of Bitcoin options by both of these groups is opportunity. Opportunity of maybe a lifetime. And for that, Dale and I, we have to go back to our youth in the late winter, early spring of 1983, when the Merc first offered crude future contracts.
Okay.
So it was a brand new opportunity. Now, what's going to happen with Bitcoin, with these Bitcoin options, is suddenly the world of cryptocurrency investors, and it is going to consolidate towards Bitcoin and certainly Ethereum to a degree, but it is going to be immediately the ability to hedge. And for that matter, also.
Let me ask you this, John, because what you're talking about right now reminds me of an interview I did, I don't know, maybe a week or so ago, where my guest said the reason, and he was a very sharp technician, that he likes focusing on Bitcoin. He used the term because of its reflexivity. It's very reflexive. As you can see by this 4-hour chart, 72.50 to 10.5 and 3-4 candles, 20-30% moves. I call that reflexive.
The volatility is tremendous. Now, for anyone who knows my trading style, which is very long game, I look for the money between the lines. You know, we'll particularly in this internet era, one of the things that we know in this market, this era, whether or not we're talking futures, equities, or certainly cryptocurrencies, it seems to be that this era has a variety of characteristics, and I suspect it's going to last. This is going to be a generational thing. It overreacts. It constantly overreacts. It tends to be greedy. It doesn't, and it rarely hedges. So what that means are, and if you use options, and obviously it can be anywhere from the most conservative of covered calls, which I hope our people holding dividend positions really give thought to, particularly those of retirement years, to obviously more aggressive, say, for instance, a bull calendar spread or straddle positions. All of a sudden, we have a trading window and a window of opportunity that will be wide open. Now, for someone like, for instance, let's say someone who was the long-term believer in Bitcoin, or whatever it might be, this, I think they say reflexivity.
Yeah.
Is that reflexivity? This volatility is going to give us one heck of an option premium, right? So that the ability to maintain your position and hedge your position will be, to whatever degree that you so choose, will be extremely easy relative to do. The contract size are very modest. One with the back, one contract, one Bitcoin back, and 5 with the CMA groups, right? So they're going to be very
5
easy.
Bitcoins on
5
the contract?
Bitcoin on CME, 1 on back.
Okay.
And they're going to be very easy to manage.
Like they have a mini going too.
Yeah. As this rolls out, as they roll out, these are going to be very easy to address. But how many times do we get a situation where we can be involved in such a highly volatile climate as Bitcoin, and yet be able to hedge, and for that matter, how I like to trade between the lines, you're constantly looking to scalp the premium, scalp the decay of option premium on a regular basis, weekly or monthly. Now, this is where I keep going into this.
Let me ask you this, Joe John.
Certainly.
If you brought up crude in '83,
Certainly,
and it's a different era now, how long do you think it'll take for volume, tight spreads, liquidity to develop in these instruments, open interest?
I mean,
to make them
being
viable?
very honestly, I'm taking a director role of hedging strategies with Anyverse, and one of our goals is to improve liquidity. And I believe that this new announcement, the new launching of these options, is going to increase institutional work tremendously. And with that, the volatility, this is going to start a tighter spread, right?
Mhm.
Because all of a sudden, it's going to be much more contained and
So
corralled.
maybe the quicker it builds, it's a tell of how needed it was.
Yeah, absolutely. Now, of course, it's going to take a while for adoption. I mean, these things take years for adoption, but in between then and there is an extraordinary amount of money to be made. There's going to be, whether or not you want to call it the scalping of option premium, or in essence, thinking of a time arbitrage. I always like looking at these as time arbitrage. I was explaining to people, and it goes back to say things that we mentioned on your show nearly a year ago on trading FCX or some of the other things like Oxy or XOM, Exxon. We might be looking at call options on these weekly where we're just scalping up that decay weekly, and it doesn't seem like much, but then you go, well, you have figured out which 1.5% a week means, right?
Yeah.
Well, so for the young investor, and one of the things that's happening in the markets right now, we have problems getting the millennial investor, and obviously, the younger generation Z investor coming into the marketplace and taking part in sort of the traditional venues that our generation did, right? It's one of the complexities of the fourth turning as it goes to the investment community. They're not coming in, but where they do have a great enthusiasm is with cryptocurrencies. There's definitely a difference of passions, right? Now, with this advance, we're going to be able to hedge our positions perfectly if we so choose, or for that matter, make far more investments in a capital efficient model, right? To take part in what one believes is the upside of this market, or conversely, obviously, if one doesn't believe the downside of it. I believe strongly in the future of cryptocurrencies, but in between then and there, I want to scalp out that in between money, and then in between money, because of pardon me, I don't know the gentleman's name, but it's wonderful. I like that reflexivity. That volatility is going to give us a very significant option premium, a very significant premium. And as I've said before on your show, it's just one thing we can rest assured is markets go up and markets go down, but each week option premium decays. That's where our big situation with Bitcoin is, to me, with these products. And this is very much
Be
like
the house.
Pardon me?
Be the house.
That's exactly it. Be the house. I'm not, don't you find that often, maybe we're showing our age a little bit here, Dale, but people are always wanting to state an opinion on both a political and economic area, and how it relates to the investment. And the truth is, I don't have an opinion. I just read and react, right? I constantly read and react. If it looks like it's going up and my numbers support it's going up, that's what I want to be involved with. I'm not concerned with it. Like the gentleman's commenting before, you said you had a gentleman on the show recently who mentioned that he's very concerned that November will bring us the surprise, and bears will be eating salmon, by the way. It's on my turkey day on Thanksgiving. Bears will be eating salmon with the possible U.S.-Euro trade war, right?
Yeah.
And that is something I believe is very strongly in the cards, a very strong possibility, but I'm going to be hedged for it. I'm looking for that in-between money, and that's where our gold on it. Now, this is really, to me, an enormous situation for traders. I've been hoping for this to happen for over a year. I've been looking at all sorts of different systems. I've got different groups that we trade options on a daily basis closing. But this is the one that we've been waiting for. And to me, it seals the link of Bitcoin and institutional investors, and how retail investors of significantly smaller capital outlays can become involved. As rarely will we see a situation of such pronounced volatility, and it's something that is potentially getting a great deal more institutional support, and we can go in there safely, confidently carve out our scalps.
Yeah, I mean, look, all people have to do is think about, say, for example, we had a 10% move in the Dow Jones. It would be record shattering, news headlines everywhere. In Bitcoin, it happens quite frequently and even greater. So, and if it happened in a currency, that too would be an unusual event. It's not
Absolutely.
an unusual event in Bitcoin.
Now, there are other things supporting. Obviously, last week, that's why we had the big bump of Bitcoin. China's comments as far as very pro towards, the use of digital assets, without question. But I want investors, as we lead up to the December 9th of December launch of BAC, and I'll certainly be willing to update as much as you need this of Bitcoin options. And then we have a further announcement coming, our further launch coming with CME. It'll be a bigger contract in the first quarter of 2020, to be fully aware of this opportunity. It's a very unique situation. These come around once in a blue moon, right? And we've got a rapidly emerging market, and one that the investors might be able to come in for a relatively simple type trading positions with considerable upside opportunity.
What would you say the minimum amount of risk capital would be to
that's
take
what
advantage of it?
We want to define that. In other words, and we want to define that per individual. So, for instance, and I was explaining this to a person. I said, look, we're going in this first
But
day.
isn't there still like a bottom line? And let's say, I mean, there are some individuals that aren't even suitable to do this, right? Don't you have a bottom line of
Oh, well,
certain amount of risk capital?
that's the problem with, that's the problem, for instance, if we're looking at any covered call situation, if we, and it's one that's rarely spoken of, it does involve capital, and they're capital intensive. You can't go out and decide to, look at options. You can't decide to say that you want to hold.
You need margin.
Yes, exactly. Now, but here's the other thing: we start looking at that hold,
and you need a cushion on your margin. You don't want to be margined up on
no, you don't want to be
anything at any time, anywhere,
I don't
any
want to
place.
see. Yeah, I don't want to see anyone be in margin position, quite honestly. But what I'd like them to look at, for instance, for people who already existing hold Bitcoin, let's use, if you're holding, let's look at some of these options. Let's look at these options and use them for covered call options, and drag down the price of your investment. Now, take the approaches that we use in equities, and now apply them here. And these are very simple approaches that we can do. Or for instance, people who want to become young investors. Let's get this young generation who likes the notion of cryptocurrencies. Let's get them excited about investing in it, but investing in ways that are fundamentally strong. In other words, that we always have. We can educate them through this and help them build an investment future in vehicles that they like, right?
Well, I think first you're going to have to work on getting them to be able to have a conversation and not just text.
Well, I can't even.
I got you there, don't I? How are you going to communicate with? Huh?
It's one of the greatest problems, having a
let alone meet in person, John. That would be just too much.
I wrote a few articles on the art of the handshake because I consulted with a firm and an investment firm, and they just couldn't close deals. And I said, your people have to do more than just sending out a blank email. Get out and meet people.
Yes.
I'm not gonna do a deal unless I can shake hands. And I'll go to countless AGMs, annual general meetings, and just to shake hands with boards and whatnot, and to see, okay, are you the type of people that I want to invest in? And so in many ways, if they are passionate about investing in this area, if they're new to investing in this area, what I want them to do is understand, and it's a simple approach I always tell people, tactics matter. In other words, you just don't go in there and buy. You just don't go in there and sell. You understand your exit strategy. You understand the money is made on the buy side. You sell into buying frenzies. You buy into selling storms. You be patient. You look at the long game. The long game is the only game, because if you're only looking here for a short hit, and you're thinking everything is going to be the quote the 10 bagger or something that goes up from all these ridiculous ideas, you've missed the point of investing for the future, right? That's I know that's an older approach. Again, I'm dating myself, Del, but it's one that I firmly believe in, right?
Okay. So, John, now, do you have a program for people
No,
to participate?
we actually don't, and we'll have our website up. But what I'm going to do
cool.
is it's coming up very shortly. We just have to do all the legalities and all those things. And what I'm going to do is see how I can help investors through a series of podcasts and teach them, time valued ways and how they can take part in this very exciting market, and probably give them what I believe the most important aspect of teach risk management policies. That is the other characteristic of this era of investing. I shouldn't say generation, but it is the era of investing. It tends to be quite greedy. It tends to always overreact. It's a very dramatic market, and it avoids risk management. And truth is, the keys to, and tends to be short-sighted. And truth is, the keys to really great investing success is patience, long game, always manage risk, always manage risk, hedge always, and have a tactics. Understand your entrance, your buy side, and then know where your exit strategy, have your exit strategy plan.
John, I really am hoping that you really have a great run at crypto. I mean, I can understand how an options person would be excited by this kind of volatility. I'm showing your
Oh, okay.
Twitter right here. So is
And
this
that's
the
fine
best
dogs.
until your website is up? This is how people could follow you. I recommend everyone follow John. Here it is, Renegade Style.
Oh, thank you
John
very much.
Davies, the option tactician. To him, and I understand that people go, well, Dale, what do you trade, forex or stocks or commodities? And I say a chart is a chart is a chart. The only difference is leverage and beta.
I
And for
couldn't
you,
agree with you
John,
more, Dale. That's
and
absolutely true.
so for you to be an experienced options trader and take it to a new asset class, an option is an option is an option, right?
Thank you very much, Dale. And honestly, because I really do love your show, and I hope everyone subscribes. This is just a fabulous, in my opinion, this is the best pre-market show anywhere that you can find.
Okay, well, I'm not going to debate it. I'm going to say thank you, my trading warrior brother, for
And
hanging
anything
out.
anything I can do to help your community, feel free to contact me. It's a blessing. It's and I mean that from the deepest part of my heart. It's a blessing, an honor, and I'm humbled to help a new era of investors.
Everybody, John Davies, my trading warrior brother, going into crypto options. So have a great holiday season, John. We'll be in
You as
touch.
well,
Okay,
Dale.
buddy.
We'll talk soon, okay?
Okay, remember everyone, don't just count your strangles or condors or pips. Count your blessings, and I'll see everyone for Turnaround Tuesday tomorrow. We'll see what sets up here. You're welcome, DJ. You're welcome, everyone. Thanks again, John.
Thank you, Dale. Have a wonderful day.
Adios.
Bye.